Hello, and thank you for your interest in biscau-EN's company valuation module. You can create a company valuation in 3 steps. Step 1. Collect basic company data. Step 2. Record the balance sheet and income statement data. Step 3. Create a company valuation. You will see that with biscau you can create company valuation efficiently and in high quality. The video is kept compact. More detailed information can be found in the Learning Center. Here especially fair value company valuation or here business valuation with the video and manuals. If you don't have a login yet, you can create your test login at biscau website and here the button Try Now without obligation in 3 steps. Completely non-binding and free of charge. You start with the basic data of a company and click on New Company. You enter the company data with tax rate here and the table of accounts template, US GAAP for example. Here you can choose a country and afterwards the industry with the 2 NOGA numbers and also your market area. This information is crucial for company valuation and analytics. If you want more information on a topic, click on the question mark or go to the Learning Center. Here financial reporting, business valuation and open the handbook. We save the changes. You will now see the company you have entered and can enter further data. We go to Balance Income Statement. We adjust the closing month if necessary. And then we record the balance sheet data, cash and banks, for example. And in these fields we can add and divide, etc. Now enter the values of the balance sheet and the income statements. You should cover at least 3 years, if available. We also record the number of full-time employees in the income statement at the bottom. You can also enter corrections by clicking on the key at the corresponding position. You can record a maximum of 3 values per position. These are usually hidden reserves in the balance sheet or non-operating expenses or income in the income statement. Changes to hidden reserves in the balance sheet are automatically taken into account in the income statement. You can change the accounts in the income statement as necessary. If corrections have been recorded, the K becomes bold. Please note that you enter corrections value for all years. You can also enter special items for the automatically created cash flow statement. Click on the M, especially for dividends. If the position does not affect liquidity, such as in-house production, remove the check mark. If you want to create a DCF company valuation, you can create a budget using the Budget Assistant. Here click on the Budget Assistant. Select the number of budget years, for example 1, change in sales in percentage, and operate liquidity funds, for example 200,000, and the changes in costs, personal costs, or other company expenses. Here, for example, we want to make a budget for 1 year, changes in sale plus 5%, operating liquidity 200,000, change in cost minus 2%, and we create our budget now. Now we have created the budget for the next year, and we can choose again our budget assistant for the next 2 years. For example, we let that see here, and we change the personal cost to minus 2.5%, and we create our budget for the next 2 years. So we have made now a budget for the next 3 years with our budget assistant. Now our data has been recorded, and you can create the evaluation. You click on the printer symbol and click on Analytics. Here, close Analytics. We open Business Valuation. We choose here the year. Here we have the budget, and here we click the Report DCF method. We can activate or deactivate sections of the report. We print the report, and now we see here the DCF assistant. We can register especially values, give them a note, or we can also change our WACC, our liability cost rate. We can make here changes if needed, and here the company capital cost rate. We save our changes, and now we print our report. We print it to a PDF, and we see now our report with the table of contents, and here the management summary, DCF company valuation, with figures, with our WACC. Here we see the EBIT multiple comparing with the DCF. Here we have the balance sheet with our correction values. Here with the balance sheet diagram, our income statement with the corrections value, income statement diagram, percentage breakdown that we can see our margins, cash flow statement, our company rating with a timetable, our section in liquidity, financing and earning, and our financial ratios comparing with the industry average. In business valuation, we have different methods like fair value, report, DCF, multiples, EVA, or earning power method. The fair value method is also something very special for biscau. In the fair value report, we look for fair value with the sales multiples, EBIT multiples, and our asset value. This we add and divide for 3, and we have our fair value. Here you see the formula. Here we see the fair value in the timeline. also our sales multiples, EBIT multiples, and here our asset value timeline. This is how you create the difference from your competitors, work efficiently and with high quality. For more information, see our learning centers, the manuals, fair value company valuation, or enter basic data of a company. Thank you very much for your time, and I wish you much success.